Hello, I'm Richard Murphy. I made a video yesterday on the report of the Wealth Tax Commission that has suggested that if a one-off wealth tax of 1% per annum over a period of 5 years was levied on all people in the UK who had net assets, including their pension fund and including their home, of more than £500,000 a year, then a total sum of £260 billion could be raised for the benefit of the Treasury. Now, that report has received widespread coverage. And I think there's also been a fair amount of coverage for the fact that the alternatives to raise £260 billion are not, if you think in very conventional ways, that attractive. So, for example, it's been suggested that this would require an increase in the basic rate of income tax of something like 9% and an increase in the VAT rate of something like 6%. Now, these are obviously things that are going to hit people on lower income. And so what the Wealth Tax Commission made clear was that there are choices about who has to pay additional tax if and when the government decides that that is necessary. But, and I make this point very clearly, as they did not suggest an ongoing wealth tax to deal with any revenue collection. They believe that the costs of that and the administration of that and the chances for avoidance of that are too significant in each case, and therefore it's not a good idea. What they did instead say was that if the issue of tackling wealth was to be part of the programme of tax collection, or rather issue of tax and wealth inequality was to be part of the programme of tax collection, then what should happen is that the rates of tax paid by those with wealth should go up. And this is something that I entirely agree with. Now, let's put this in context. I am not arguing that at present we need any additional taxes paid in the UK. And there are two reasons for that. One is that the national debt is entirely under control. It is in fact not as big as the government claims for all sorts of reasons that I will be coming to in due course. But secondly, the real point is that to charge overall net additional tax at present within the UK economy would simply result in there being less demand, and less demand leads to greater unemployment, and greater unemployment obviously is the last thing we need when the economy is going to be in a pretty dire state in 2021 as a result of the impact of the coronavirus crisis. So instead, the only reason for increasing taxes is to reallocate the overall way in which taxes are taken from society within the current broad range of expected revenue. How could that be done? Well, clearly, we're not going to take more from those on lowest pay. They are already suffering. So we have to take more from those on highest incomes. And there are a number of ways to do this, which I think are much better than a wealth tax, but which effectively act as a substitute for it. First of all, let's look at the obvious ones. Income from wealth is taxed at a lower rate than income from employment at present. The most obvious cause for that is the difference in the way in which national insurance charges are applied. They apply to income from work, they do not apply to income from wealth. There's a very simple and very straightforward way to correct that. It's called an investment income surcharge. It would be applied as if it was income tax, and we had such a thing until about 1985, and it was 15% extra tax on investment income over the rate that was charged on income from work, and the implication of it was that those people who had to pay this were effectively making up for their shortfall in national insurance contributions. I believe that the time has come to consider this, and I would welcome that on investment income of, say, more than £5,000 per annum for anyone who wasn't a pensioner, and a somewhat higher sum, at least £25,000, maybe higher, in the case of pensioners. Now, that to me would seem to be fair. What else could we do? We could equalise income tax and capital gains tax rates. Capital gains ends up in a person's pocket, it funds their lifestyle. Why those who get capital gains rather than income should pay lower rates of tax and have 2 annual tax reliefs a year is really baffling. Quite simply, income tax and capital gains tax have to be equalised, and then we get a much greater degree of fairness. But perhaps the most significant thing we can do is look at the tax reliefs that are provided to those who are already wealthy. So, for example, pension tax relief costs £55 billion a year in the UK at present. Why are we giving that relief at higher rate to those who have higher incomes than we are to people who have lower incomes? There's a straightforward injustice in this, and the adjustment to that would raise, well over 10 billion a year in itself. We also give higher rate tax relief to those with higher incomes when they make donations to charity, but the charity sees no benefit. Just the person who makes the donation does. Again, they get more tax relief on their donations than do those who are on lower incomes. There appears to be no justification for that. We also give a whole range of other subsidies to wealth. For example, ISA tax reliefs cost £2 or £3 billion a year, around £3 billion I think now, and that goes to people who can afford to save. By definition, those who are saving significant sums in ISA accounts are very wealthy. I believe there should be a cap on the value which a person may hold in an ISA account so that this relief is restricted. £100,000 would seem to be a significant amount of saving to be subject to tax relief in this way, and we could cap the relief at that level. There are other reliefs as well, venture capital trust reliefs and various other things, all of which need review, because there's no clear benefit from these to society at large, but there's a significant benefit to those who claim them for tax purposes. My point is simple. We could really make the tax system a lot less complicated, eliminated a whole load of tax reliefs, remove the opportunities for abuse in tax planning, and create a much fairer society by simply addressing the issues that I've mentioned. And as a consequence, those who have higher levels of income and those who have investment income in the main will pay more tax as a consequence, which would be fair because it would bring their tax contribution, broadly speaking, up to the level that is made by those who have to work for a living. I cannot think of anything that defines justice more obviously than that, and I believe that this is a direction of travel in which we should go to create justice in our society, to remove the chances for tax abuse, to eliminate the time wasted on all sorts of tax planning, and instead to focus on how we create a productive recovery from the crisis we're in. This is the perfect moment to simplify our tax system. Everybody demands it except the wealthy who benefit. Let's get on and do it now. And the result would be something equivalent to raising that one-off wealth tax. Maybe not quite as much per annum, but a significant amount. I would be very surprised if 30 to 40 billion pounds could not be very easily found in this way. And to me, that's very useful because, and I stress the point, I don't want to increase the overall tax contribution. That gain must be redistributed to those on lower incomes to boost their well-being and to boost what they spend into the economy to create more employment so that in the long run we get more people at work and the consequence is a stronger, better, wealthier society for everyone. Thanks for watching this video. If you've enjoyed it, I'm pleased. If you want to see other videos like this, there are links below this screen. If you want to subscribe, hit the subscribe button. Follow me on Twitter as well, @RichardJMurphy. Look at my blog, Tax Research UK. And if you'd like to donate, because this video series is being largely paid for by donations, there is a donations button on every single post on my blog. Thanks a lot.